Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is we get everything you need to know in 90 seconds at 9 o'clock with news the fight against inflation is making little progress in the US. First up, the American inflation rate fell less than expected in September, although the shifts were minor. It came in at 8.3% in August and was expected to fall to 8.1% last month, but in the end it came in at 8.2%. The key takeaway is they aren't making any progress yet in getting it down. Their core rate was unchanged at 6.2% from a year ago. Month on month, the rate actually rose. Clearly, the Fed has much more work to do to change the trajectory, and markets are assuming it will continue to fight inflation as its number one threat. The next Fed rate hike is now expected to be another 75 basis points. The US Treasury 10-year yield roared above 4% on the news, but it has since settled back under since. And the new US jobless claims levels rose last week to just under 200,000, a 6-week high, even if historically still very low. One direct echo of the high US CPI data was heard in Japan. Their currency fell to a 32-year low, and markets are assuming their central bank will act again to restrict the devaluation. And in Japan, producer prices rose to a 5-month high, rising 9.7% in September from a year ago and blowing past the market consensus of an 8.8% rise. And later today, we're expecting both consumer and producer price data from China. There, the changes are expected to be modest and low, primarily because their economy is in a stall, held back by pandemic lockdowns that seem to be spreading. In Australia, their October inflation expectation rate came in at 5.4%, unchanged from September. But it has been moderating since June, so consumer expectations therefore appear to be responding to significantly tighter monetary policy in Australia. One place you can see a sharp response there is in the sales of new homes. Their home building lobby group says new home sales declined by almost 15% in the 3 months to September compared to the previous quarter. That is quite a pullback. And globally, freight rates for containerized cargoes are still falling fast, especially on the China trade. Shanghai to Los Angeles was down 13% in a week. They're down another 6% last week alone globally and are now much lower than the 5-year average rates. Bulk cargo rates slipped as well. The US Treasury 10-year yield starts today at 3.94% and up 4 basis points from this time yesterday. At one brief point earlier, it hit 4.06%. And the price of gold will open today at $1,665 an ounce. This is down $6 from this time yesterday. And oil prices start today $1.50 firmer at just on $88 a barrel in the US, while the international Brent price is at $93.50 a barrel. And the Kiwi dollar will open today at 56.3 US cents and a quarter cent higher than this time yesterday. Against the Australian dollar, we're firmer too at 89.5 Australian cents. Against the euro, we're a little softer at 57.5 euro cents. That all means our trade weighted index starts today at 66.9 and unchanged. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and that was 90.